Again. Hey everyone, this is your Precision Markets coaches, Brian and Nathan, hosting our weekly office hours Tuesdays and Thursdays at 12 o'clock Pacific Standard Time. That's GMT -7. We host these calls. This is your first time joining the calls. We ask people to join in and change your Zoom name to your Discord name so we can make it easy to identify you and also be able to follow up with any kind of questions that you may have afterwards. Feel free to ask your questions within the chat. And we'll answer them in the order we receive. And with that, we'll go ahead and get the first question over to Perry.
Yes. Yeah, Nathan, I know you trade Euro USD, and I see like when the move, you don't get the first part of the move, but the ending, you'll get the ending of the move, you'll be getting 10R. Am I like 5R, 7R? Am I correct?
Yeah, that's right. So basically for me, my approach is basically like I kind of learned, see, when I started trading, I was always wanting to be kind of like the first one in. And I think with chalk in itself, change of character, it gives you that opportunity to get in first. However, I found when I started trading, especially the first 6 months, I was taking a lot of losses and a lot of hits trying to get in on that very first change of character. Now, sometimes like they do go, and it's great being in at the very top of the move, but those losses kind of stacked up and was affecting the way I am, with my psychology, my personality. Because if I was to get like 4, 5, 6 losses in a row, I would be totally like down for the day. Like mentally, I'd feel really shit, and it could ruin maybe the next day and the day after that. So it really affected me. I wasn't, like I was saying to Brian earlier on, I'm like a perfectionist, and I'm super, super hard on myself about everything in life. So if I take a few losses, I'm a little bit of a sore loser. I'm like, oh, like it gets to me. And one of the biggest things I suffered with psychology was anger. So I would be like straight away, like, I have to get in this. Like, I can't believe I've done this. I got to get in again. I would revenge trade. I'd over trade. I'd look for other ways to get into the market again and again and again. And I found that was just tough on me. So the only way I could change that and fit my trading plan around not just the lifestyle, but also my personality and who I am, was to wait for extra confirmation. So if it means that I'm not going to be at the very start of the move or at the very, very top or the very, very bottom, but I can get in somewhere in the middle that makes sense to me and where I feel confident in. And also, if I take a loss there, I won't be too hard on myself, then, it works well with me, right? And I think that's what everyone needs, is that when you come into this game, you got to make your trading plan, right? We all have trading plans, myself, Brian, all the coaches, and we've worked super, super hard on them to fit us, because precision gives you the tools, right, of how to trade and what way to see the market. And some people relate to different coaches because of the way they see the market, not because one coach is better than the other. Like, we're all the same. We just see it differently. And some people relate to us because they see it the way we see it with our eyes, because we're all different, right? But the thing is about creating a plan that fits you. And the only way you're going to be able to fit your plan around you and your psychology and your personality is to track your data for your technical stuff. So why you're getting your losses, and also track your psychology. Like, how are you feeling? Like, what is the repercussions or the side effects to taking losses, or maybe long durations of losing streaks and stuff like that. So you have to really base it around you. And something I found, like we were talking, like you were saying there, was I tend to get in later on in the move. That's just because I love that extra confirmation. Like, I like to see it go a bit. I like to see supply a little bit more in control, to show me like that real bearish intent or that bullish intent as it's going that direction. Because really, like, the market will give you a few opportunities to get in, usually, right? 80% of the time you'll see, oh, there's an entry, oh, there's another entry, and I might even give you a third entry. And sometimes you can even get scaling. So you'll be in one, you're watching it, and as it's on the way to your TP, it presents another entry. So you can add in a scaling on that. So for me, it was just based around the psychology part of, I'd like a bit more extra confirmation. And how do you find that extra confirmation? It's pretty simple. Like, you look to either trade from another 15M zone that gets created, or You can watch the 1M if you're okay on the 1M chart. Look for more breaks of supply, more breaks of demand, depending on what your entry criteria is. If you like reactions, if you like sweeps of liquidity, then breaks, you can just get in on that way. Obviously, you have to back test and you have to see what it's like in the live market, but that's simply why I get in on the bottom of moves, and I like to scale in. So you'll see me with one trade, maybe with 6 or 7 or, then I've got another trade that made an extra 4 or. So it's totaled at like 13 or, and I'm like, that's me done for the day, you know? And that's just the way I trade, bro, you know?
I see. So can you show, because I see the trades that you've been showing, that there's no 15-minute POI that you're on, because I know that the 15-minute POI has already been like mitigating. You get like at the bottom of the move. So like, where are your POIs? Are they 1 minute, 3-minute POIs, or what?
Yes. So basically, the way to look at it is like this. Right, when you've got a 15M POI, right, how is that POI created, right? If you pop down to the 1M, go to basically go to your 15M chart, mark up a 15M zone, and then go straight down to the 1M and just see how that 15M POI was created. If you notice something, right, with all them 15M POIs, how they're created on the 1M, they're created the exact same all the way down, right? Now, it's quite interesting because what you see on a 15-minute chart might be just one candle and then a break. And you use that as your POI. But if you investigate that on the 1M, wait till you see what you see down there. You're going to see maybe a little bit of demand pushing up. You're going to see reaction. You'll see a sweep of liquidity, and then that push down. That will give you one 15M candle. So there's 15 1-minute candles in that one 15M candle. You should check it out and see what's in there. It's quite interesting when you investigate how these zones are created. So when it comes down to the 1 minute, I'm able to kind of sit on the 1 minute, and because I understand how it's created and I've seen it time and time and time again, I can literally sit on that 1 minute and I'm just trading away on it. So if I have a 15M supply zone or a 15M demand zone and price is on the way to one of them, as I'm sitting on the 1M, I can trade on the way to that zone before it hits that zone. And when it hits that zone, then I'll look for the entry criteria to go down. But that's kind of this, I wouldn't say secret because it's there in front of all of us, but see how that 15M POI is created, right? Check it out on the 1 minute and you'll be quite surprised because you'll start to see it form all the time. And that's how you can get in on scalings on the way down in a down move, right? Or on the way up on an up move. I tend to keep the 15M chart on one side of my screen and the 1M chart on the other side of the screen. I'm not enticing you to use the 1M chart and to get in and in and in, but I'm just saying, check out how those 15M zones are created. And once you start to see the same pattern happen over and over again, because that's how they are created, you'll understand that you can get into moves before they even come back to those 15M zones to be mitigated. You're already in them because you're watching the 1M creating them. Do you get me?
Yeah, I get it.
Yeah, it sounds like a bit of a mystery, but if you have to rewind this video, like, trust me, bro, it's quite interesting. It is a little bit advanced, but that's pretty much how I do it. I know some people have some other ways of getting in all the way down, like in different moves through other breaks of supply and demand, but the way I do it is I'm waiting for a zone to actually be created by the 1M chart. And I can already see the entry zones in there before they come back to that 15M zone to do the whole mitigation and then the change of character. I'm already in that. Do you get me? So sounds a bit mysterious. I hope that answers one of your questions, but it's a little bit of homework for you. If you want to just jump on, mark up a few 15M charts, go down to the 1M, see how those 15M zones were built on the 1M, and see the pattern that happens constantly. Because when you see that then on the 1M throughout the day, you can easily get in on trades without having to wait for them to come all the way back to mitigate. But like I said, it's something a little bit advanced. So if you're still not used to trading, you're still getting the hang of it, don't do what I said. But if you feel like, you're kind of opening up to something new, maybe a new subject, or you just want to open your eyes a little bit more on something else, that's definitely something I'd advise you to take a look at.
Cool. Thanks.
Yeah, welcome, bro.
Do you want to show that on a chart, Nathan? I think somebody asked that.
Yeah, sure. Let me take a look at my 15. So let me bring this up. Okay, cool. So let's take a look. So let's just say, for instance, right, we have something like this, right? So we have, let's go back here. Okay, so for instance, here we have a 15 NPOI. So when I mean about investigating them and checking them out, like inside here, you have a 15 NPOI, right? So if I was to mark this POI right here, if you were to see just how it is built by basically just going back here, go to the 1M. As we can see here, I'll just play this forward ever so slightly because it wasn't built yet. That's the 15 NPOI we just marked up. So if we see this on the 15, we can see how it was built, right? And what do we see as it was built, right? We see a change of character, right? We can see the highs are taken. We can see that we have a bit of demand in here that failed. Got the push down again. We got a flip zone inside here and then a tap in. So basically, the rule of thumb would be that when this zone is being created, I'm watching it being created as time is going on. I'm marking up the chart, and on the 15M side of the window, I'm seeing the 15M being, you know, as it's being made, I'm seeing it being made. So in this sort of instance, there's no trade here, but I would be looking straight away to probably get in on one of the zones, most likely the one with swept liquidity, which would be the extreme. The price didn't come back here. But that's basically what I would be looking at. You can do it again, just see how the next zone is built. So if I stick on another candle, again, we have this area right here. That's another zone right there. Maybe price did come back straight to that area. Well, you can see we got that pop up, swept these highs. So we didn't tap into anything significant. Again, how is this zone made? I have demand inside here. I get that push up. No reaction off demand, so there's no entry for me here on the 1M. So that's basically all I'm doing as the 1M is playing out. I'm watching these being created, and I can already see this is a 15M zone because I know how it looks. I've seen it so many times. I see demand inside here. I see this pop up. I see a reaction. I see a sweep of liquidity. I'd be looking for an entry somewhere inside there. See if we get it. Yeah, that's okay. Well, this is going the opposite way. I have nothing to prove today, but basically that's how I'm trading. And I see it the opposite way around again. This is another 15M zone. You just can't see it from the outside. But right here, we have another 15M area. We've taken out this 15M zone. So I know there's already a change of character right here. So as this happens, I'm already able to see, okay, well, here is that low taken, here's the high taken. I see it's made a 15M zone again, trade from the sweep, this swept liquidity. Obviously, this would be the area to sweep. I just constantly see this stuff. Like I said, it's a little bit advanced, but over time, these things just come in handy. But that's all I was doing. Like if you look at yesterday's trade, I think yesterday was actually a real perfect example. Let's take a look over here. Like basically, if I just pop on here, I'll go to the 15M chart. So inside here, I can see this is a 15M zone. And I can just see by the way it's created, like I can just mark up all of these, right? That's a 15M zone as well. I'll just put 15M supply. And this one right here. So as this is being created, I can see it on the 1M. So I'll just go to the top one. So all I'm looking for is demand, reaction, sweeps, breaks, any sort of chains. I absolutely love chains, like supply chains, demand chains. It shows me that price tends to navigate and come back to these areas. So again, as this is being created, I see a demand, push up, I see a reaction. I can now see the break of this demand. So this demand is right here. If you don't see it right here, how do I know it's demand? I see a reaction, I see another reaction, I see a break. So this is a flip zone, so I can see supply is here. We tap back in, we chain into it. Again, we have demand down here. Why? We get a reaction. Again, we pop up, We don't really sweep any liquidity, we break down. So this creates another 15M zone inside. I enter inside here. Do you see what I mean? And again, the next zone. So you can constantly get in on these areas. So that's the way I do it. Can you guys hear me okay? Yeah.
Yeah, I hear you. That's clean. That's clean. I was thinking like, man, he get in low. The move already went, but obviously it didn't. He still got 17R down here.
Yeah, you know, and it happens all the time. But like I said, it's something that takes time. I'm not saying to stay on the 1 minute, but if you just go to the 15, you can see these zones, how they're created. It's the same thing over again. It's demand, it's a reaction, it's a sweep, it's a break. Price comes straight back in, mitigates, pushes down, creates another zone inside here. Open the zone, you'll see the same thing. And that's how you can just trickle all the way down continuations. But like I said, it is quite an advanced subject, but it's something to look into if you're willing to go that extra mile and say, you know what, I'm kind of interested in opening my eyes a little bit more. I really understand the whole supply and demand stuff. And that's really it. Like, yeah, nothing more to say out of that. But like, it all comes down from the higher time frame at the end of the day. So like in these sort of trades, I know we're going to come down to this 4-hour demand area, right? I know we're on the way down to it to mitigate it, to come back up. So that's why I don't mind trickling down and doing this, like trading on the way down to it. That's why I took TP right at the 4-hour demand, because I know we're going to come down to demand and we're going to see a reaction. And it held, it came up, we got that reaction. And in the end, we came back up to another 4-hour supply, we pushed down. So it's all coming down from the higher time frame down to the 15, and from the 15 to the 1 minute. But I'm always looking at the 15 no matter what. But that's basically it. Yeah, that's the secret. But it's all there, you know. I think over time you just tend to like gather a bunch of information and you stick things together, and if you investigate a lot, you'll start just to see some shit happen like day after day, and you can just capitalize on that once you have enough data on it and you've seen it enough.
Yeah, that's clean. I just be thinking sometimes like I don't want to take it in the middle because I'm thinking it's gonna reverse and come back up, but you know, I don't have the eyes for it yet. So
yeah, well, don't worry about it, because at the end of the day, there's enough ore to bank on these 15M zones anyway. So like if you were following this morning's PA, which I wasn't, I was gone, but like this is freaking Asia. Like, God, I can't believe even Asia moved that much overnight. But like, if you're just following PA within itself, we can see like we're taking out highs, we have demand zone. We take out highs, again, we've got a demand zone. Take out highs, we've got a flip zone here. You know, price, I guess, somewhat came back to it maybe here if there was something. But like, it's the same thing over and over again. If you are just trading the 15M zones, waiting for them to come back, look for the entry criteria to go up, that's totally fine. You could bank enough ores on that. Later on in the future, you'll definitely catch all of these little small moves that are inside and these little wicks and all that sort of thing. But definitely for now, just look for supply to be taken out, highs to be taken out, look for the zone, wait for it to come back unless it creates a new zone, and just trade it. Like, that's all you can do. And to be honest, like, I only trade one pair, and one pair is more than enough for me because I make enough ore on this to eat. You know what I mean? So like, to be honest, that's all you need is one pair. So for you, your pair is pound dollar, is it?
I just changed. I just tried to get on. I'm just trying to get on one pair now too, because like I'll be going crazy sometimes. So now I just switched to EU, and then I see that EU is not like an extreme. Like, man, I was waiting for EU to come all the way up to the top, and it just left. I'm like, wow, GU would have like went up to the top and then came down. So I'm on EU right now because I know it's like it's kind of more stable a little bit. So.
Yeah, I definitely recommend it. I've been doing it from day one, and I tried GU, and I used to love US 30 back in the retail day. Well, we're all retail, but like before the supply and demand days, it was like US 30. But this tends to be the cleanest and it's the friendliest EU. And there's a lot of opportunities. And trust me when I say it, like there's enough money here for you to make to basically have that freedom that you want, if that's your goal, you know, it gives nearly every single day in every session. Like EU is brilliant.
Yeah, I guess I traded yesterday, and then it was kind of slow for me. So I had got the trade at the top, like where your first POI was on the 15-minute. I had got it there yesterday, but to the right just a little bit, right there. I got in right there. Right in the middle. But I had got out because I just thought it was too slow. I'm like, man, because I'm used to Nas. I'm like, Nas would have left already, but I didn't know. But I didn't know EU was like that. So now, coming, fast forward, I'm gonna just stay in my trade then, because I took a great trade way up there, and it was just too slow for me. I didn't know, but now I know like EU is not as fast, I guess.
Yeah, no, it doesn't move as fast, but it'll definitely provide many opportunities, and it's not too high on the search for liquidity, as in like it doesn't give too many wicks, and it doesn't really search too much for liquidity. It'll kind of take something and then it'll go. It might take something later on, then go again. It's not too bad. Just in news days, you might get like this sort of shit here happening randomly, but outside of that, I definitely think you only need one pair to be profitable in this game. You truly do. And trust me when I say it, like one pair, bro, it's enough. It really, really, really is. But you're coming along really well, bro. You're really, really getting it now.
Shit, man, I'm trying.
Keep it up.
Thanks.
So got another question in here. Nathan, what's a CPB? So CPB is basically what I call a catalyst for pullback. So all it is that it's a zone that I identify that will give price a small pullback, but it won't reverse price. So if price hits one of these, let's say this area here, price hits it, it's not going to reverse it, right, and take out the high. It might just give a slight pullback, and that's about it. And usually these pullbacks will be pullbacks back into a supply to continue down, back into a supply to continue down. That's what they are. How I identify them is through internal and external range liquidity. So as you can see here at the high, we took out external range liquidity. That was that sweep today that we've seen. So when we took out external range liquidity, we see we had a bit of demand inside here. How do I know that it's demand? Because we get a reaction, right? These are reactions right here. If this was to sweep straight through it, then that would be just liquidity sweep. But the fact that this stopped and it paused, this shows that this is actual demand. So that's how I identify what a true supply demand zone is. I always look for some sort of reaction. So when I got that reaction and then demand failed, I know that every single demand right underneath this is just a catalyst for pullback. So when I'm holding on to my trades, I am holding on with confidence, knowing that all of this is just internal range liquidity to be swept until we sweep external range liquidity again. So here we have external range liquidity. So you can see I've marked up, we've come down, and we're starting to pop back up again. So that's the way I identify them, but it has to be with trend, because at some stage, let's say, okay, we're obviously, this is a bearish piece of structure right here. So if we were to start taking out supply zones after taking external range liquidity, some of these supply zones are going to be catalysts for pullbacks, right? However, within the premium and the discount of this leg, somewhere within the premium area, one of these ain't going to be a CPB, right? It's going to actually push price to continue lower, right? So basically, you kind of have to mix it with premium and discount, but it's not something that Precision teaches. It's more a personal sort of thing that, a few people have kind of got onto. So I wouldn't want to push it. Like I said, it's another sort of advanced thing, but if you can go to the resources folder inside Discord, I have a little image diagram there on internal and external range liquidity. If you can get the hang of understanding where internal and external range liquidity lies, once price takes that and you get into a trade, you can hold within confidence at least the whole list to, if you're obviously bearish in structure, hold to the low. Now, I'm not saying hold full volume to the low, but you can hold in confidence some sort of partials at least to the low, knowing that you're taking that internal range liquidity. Yeah, so definitely something to look into. It's another chapter, I guess you could say, in the book, internal and external range liquidity. But combining that with your trading plan and the knowledge that you know, you can build up some really cool trade ideas and just hold on to trades with confidence. Because, you know, why would you just take out a trade at maybe, you know, some of these lows when you could hold on to maybe some of these, right? When these become liquidity, you don't have to be too afraid that if you get a little reaction off this CPB, that was basically just that. You don't have to worry about it. Here again, we get another reaction off this CPB. It's only a reaction. Like you might see on the 1M, oh shit, on the 1M, it's coming back up, it's coming back up, it's coming against me, it's coming against me. Well, when you understand internal and external, you can kind of hold through that and be like, yeah, I'm cool. I'm gonna go make a sandwich. I'll come back. You know. Sorry if I'm talking so much. I don't know where Brian went. He's the one that usually talks.
Man, you're doing a great job. So why would I even butt in? Thanks to that same concept, I ended up borrowing Nathan's CPB concept. So if you looked at a couple of my recent winning trades, you'll see I have these red zones pulled out. And I look at it a little bit differently than Nathan, but I just look at supply and demand zones that cause really strong reactions. And when it gets to those zones, I'm just looking to see, does it break it or is it going to hold? But like Nathan said, it comes up to those zones, you'll get a kind of a pullback. That's what allowed me to hold my trade for over 200R that I posted, because it went up to the zones. I looked at the reaction. I said, oh, it looks like it's going to pull back. It's actually going to break through it. And it kept breaking through each one of those zones. And so it went from my immediate M1 target. It beat that. It went to my M15 target. It beat that. It went to my H1 target. It beat that. So after that, all I focused on was the daily. And it ended up going past my daily target. But the whole thing, my focus was always finding the right direction in the market structure. Because once you get the market structure and the direction right, you can hold trades for as long as I did or even longer. So that's the key. It's really getting the right direction of the market going. And then you just identify a couple of areas and say, hey, what happens at these areas? These are interesting points where I could expect something to happen.
Exactly. Yeah. 100%. It's just about gaining that confidence too. And sometimes when when you're going through those phases of learning, it's good to like write it down in your chart. Like, so by marking up a few like CPBs or levels, just writing them there in front of you gives you that little bit of extra confidence as well to hold through those trades. Like, I don't need to write CPB all over my screen. You know what I mean? I could just have a demand zone there, which is totally fine. But for me, I know that having it written there, I've committed to understand that these will only give me a pullback. I've wrote that CPB there, that's a catalyst for a pullback, and that's it. So I have it in my psychology, it's there, I believe in it. So sometimes it's good to mark things up on the chart, whether it's levels or whatever it is. Like, I know ICT says he doesn't like to put too much makeup on his charts, or lipstick or something he says. But to be honest, I think sometimes it's good to have a bit of lipstick on the chart, right? You know, you need to be confident with your trades.
No, definitely. That's funny. Find the balance between too much and not enough, because you have not enough, then you fret. You have too much, and then there's I've been dealing with too much on my chart as of recent.
Yeah, here. So marking up a CPB on the chart. Well, basically all it is that I'm looking for. So for example, here we have this 4-hour demand, right? It's this area right here. So in this sort of situation, we can actually see it quite clearly. So where's my last bit of supply that I have here? Well, for me, this is my last bit of supply right here, right? So let's just ignore all of this stuff right here, right? So basically, I see this tap into demand. I'm looking for that change of character, which is a break of supply. So here we get numerous reactions. So here's a reaction here, here's a reaction here, and then finally this breaks. So I know now that if this is broken, and to the left, I know we've also taken external range liquidity, I can look and say, well, the next zones should only become CPBs. Also, as Brian was saying about structure is so important, I'm looking at this bearish structure. So within my premium and discount tool, I see that this area, this high, this low, that's my range. Premium discount somewhere here in the middle. So up here in premium, I'm expecting price to come up here and to pop back down, right? So the second this supply zone is gone, I understand that we've taken external range liquidity to the left, and all of this will become internal range liquidity up to a point of premium, right? Which is in this sector here, right? So specifically, I was actually looking at this zone, hence why it's not marked as a CPB. And I was looking at this zone up here as well. So for me, everything in here became a CPB. So this was supply zone here. That became a CPB. Obviously, supply zone here, CPB. This is also a CPB. These are catalysts for pullbacks. And look at every single time price taps into one of these supply zones, right? Taps here. Here's the tap into this one, right? Gives a little pullback. What does it do? Pulls back into the demand zone. This later became a CPB, as you can see here, but at this very moment within this PA, this was actually demand zone. Again, we tap into this CPB here. What does it do? It only gives a reaction, pops back into this demand zone right here to continue back up. Again, I have this one marked as well. On the left side, this here one is the CPB2. And we can see we get a small reaction. It doesn't basically do anything, it blows straight through it. And again, we have the next supply zone. You could mark this one, depending on how you mark your zones, or maybe the inside bar. Again, what happens? Taps into the CPB, comes down. And what do? We mitigate a bit of demand. This kind of flipped something to the left, whatever, and we pop straight back up. Again, pop into the next CPB, as we can see higher, this one here. Yeah, we tap into it, we pop back down into demand. What do? We take it out. But obviously, any of these zones that are in premium can be the zone to take that will actually work and continue the bearish structure, because we're keeping that in mind. I really had my eyes, like I was saying, on this area here. I was more interested in this because it was part of the supply chain swept liquidity. I was super interested in this, but it didn't come to that. But that's how you mark them. I would recommend, if you're doing anything like this, just be careful of the top 25%. So if you had your 50% from this high to this low, your 50% was here. Obviously, the top 25%, I would be very concerned about. They would not be CPBs. If you are in bearish structure, they're probably going to work. So keep an eye out on that. Definitely anything within the discount, I'd be looking at as a CPB. And that's really it, yeah. So, yeah, all poorly priced zones are CPBs. That's the theory behind it. But at the end of the day, you know what? The market could tap into this and go down. And you can't come back to me and say, Nathan, I just lost money because of that. But within time, it'll come in time.
So for EU, we know EU is bearish, but for it to turn bullish, what would it have to do for you for that pair to turn bullish right now?
Right. Well, at the moment, if we actually look at structure and stuff, right, we'll start from the daily real quick. Basically, the way I see structure, I look at structure. I structure, right? I just look at it and I mark up my highs and lows. I don't use a pip count or anything. So for me, on the daily, this would be lower low, lower high, and lower low. So this is my range on the daily. So obviously, we've come into premium supply here of the daily range. We had this area right here as well. It failed to take out demand. It failed to take out the low as well. So we've tapped into the extreme and we've taken a bunch of liquidity here and also internal range liquidity too, right? So in order for me to want to see anything truly bullish, especially for the long term, we'd have to take out this high. That would be the first thing. But when it comes to intraday order flow within itself, from what I can see here on the daily, we tapped into this supply. Again, we have this demand zone down here. We have a little bit of supply that's inside here with this inside bar. How do I know it's supply? I have a reaction. We have a sweep of liquidity down here. And then we broke this high, right? This little bit of supply as well. We flipped it with this area here. So we've tapped into this. We've come down into this. So if I wanted to see some bullish PA, I'd need to see price show that demand is in control, at least on the 4 hour, right? So on the 4 hour, when I pop down to this, my structure on the 4 hour is the exact same as the structure on my daily, right? You could say some of this is structure if you use a pip count, which is totally fine. You could say it's substructure, this stuff inside here. For me, this is my high, this is my low, these are my swing points. Everything inside, I'm not really too bothered about, right? I try not to mix things up too much. So for me, knowing that we've come into this daily demand zone, what I'd like to see, if we are to go bullish, I'd like to see demand take control on the 4 hour, right? Because on the 4 hour, what do I see here? We had a little bit of demand inside here. We tapped into the daily. This bit of demand failed, right? We wicked straight through it. We didn't even get a reaction. So to me, straight away, I'm like, this could be a liquidity sweep. Where's my next bit of demand? Right here. Again, we get a reaction. Excellent. So we don't get a reaction on this zone. We swept straight through it. So to me, this is not valid demand. This, however, is valid demand because we get a little bit of a reaction and then we flip it. So instantly we have this supply zone. So now I'm like, okay, well, supply is in control at the moment. So obviously I'm looking for shorts all the way down. Again, we have this bit of a supply chain. So I can see the supply is still in control. We tap into the daily. So now that we've tapped into a daily, if we are to continue higher, I would want to see a break of supply on the 4 hour. So the last supply zone I have is technically this one right here. And this is part of a chain, right? I love my chains because it shows me that there's quite significant supply in control and it's holding right throughout. So in order to see bullish PA, I need to see a break of this supply. I was kind of expecting it today. I was thinking we may take out this supply zone when we popped up here, but instead we got the 15M change of character and we pop back down, right? So in order to see any bullish PA, I'd want to see that go. From a little intraday perspective though, if there was anything like a change of character or break supply on the 15M, I would probably look for longs into 4 hour supply because 4 hour supply and 4 hour demand are always my targets, right? I'm always trading between the 4 hour supply and demand zones. That's how I use order flow, right? So if I know I have this 4 hour unmitigated supply, then my goal would be that we should come back to mitigate it, at least to continue down. So I would have to see some sort of bullish order flow on the 15 with supply being taken out and demand holding the whole way. Then I'd know, okay, we're coming into 4 hour supply. This is a good chance supply is in control, right? On the 4 hour through the chains that we just seen. So I'm going to look for a change in character, right? A break of demand on the 15 and then start shorting it. That's when all these become, you know, CPBs, internal range liquidity. That's the way I would see it. So at the moment, in order to actually look for longs, as in long-term longs and bullish PA, I would want to see this 4 hour break. However, I don't mind to trade longs into the 4 hour and then look for shorts once they present with breaks of demand, if you know what I mean. So that's the kind of way I look at it. Like if I had to make an analogy around it, I would say that let's pretend the 15M, right, is the driver of a car, right? It's the driver of the car. And inside the car, you got a GPS system. So the 4 hour would be the GPS system that says, you go here, right? That direction. And the driver of the car is like the 15M. So it changes order flow. So it's moving towards what the 4 hour wants to do, right? And again, so that's the kind of way that I look at the market. Might be a little bit silly, but that's the way I kind of view it.
Yeah, that's nice. That's nice. I get it. Thank you.
Yeah. But like at the end of the day, all you're doing is trading 15M supplier demand zones with the higher time frame in mind. So structure on a higher time frame, that's your 4 hour and your daily, and also your 4 hour and daily demand, supply and demand zones. So wherever the 4 hour wants to go, the 15-minute will make it there, right? So we have to remember that the exact same thing that happens on the 15M, which is mitigations of supply and demand, the same thing has to happen on the 4 hour, and it also has to happen on the daily. You know, you have to intertwine them all together, but it has to be from the top down, you know?
Yeah, so for you look for a sale, just say price goes back into your 4 hour supply. Are you looking for a 15-minute chop or a 1 hour chop?
15M chop's fine for me. I just stick with 4 hour 15M and 1M and daily, obviously, as well. I try not to use too many different time frames, but from what I see, Brian is having like he's doing really well with the 1 hour chart, and I think the 2 hour chart too.
I just use It's the same like you. If I had used 4 hour, I would use 15 minute as my chalk. But since I use the daily, I just use 1 hour. I only use that's the only reason I use 1 hour is just for chalk. Because I should use 1 hour for POI based upon how I manage the time frames, but 15 minute allows me to get in with more entries where 1 hour I have to wait a little bit longer.
Gotcha.
But like time frames is not really like if you pick one time frame, there's a pairing time frame. So like if you use 4 hour for direction, you should use 15 minute for POIs and chalks. If you use daily, you should use 1 hour. Like they just kind of correlate together. Because just like you said when you were talking about the going into your when he asked about going into your POI or how you look to buys. Hold a second, guys. Did I have something important here? No, I guess not. So like one leg, for instance, on the daily, we're gonna go from this point to this point. If you go to the 1 hour, it's usually like market structure on the 1 hour. If I can remember to turn this bad boy on. Hold on a second. So if you go to 1 hour, it's usually like market structure. So that whole little all those four candles ended up being all these candles on the 1 hour. So it goes up. I mean on the daily, it goes up, it goes down, it makes a higher high, it makes a higher low, moves sideways a little bit, makes a new higher high, makes a higher low, makes a higher high, makes a higher low, makes a higher high. Well, we get up to our daily supply, which was right here. You go down, look on the 1 hour, well, it chalks. You end up getting a higher low created. I mean, a lower low, lower high, lower low, lower high, sideways movement, lower low, lower high, lower low. Now, if I chose 4 hour, which I tried to force myself trading 4 hour because I never really just liked the 4 hour time frame personally. I've always just liked the daily. Like going back to daily, the trends are even longer anyways. As long as you pick something above 4 hour, that's just a good reference for a higher time frame because the banks are trading on 4 hour daily. They're not all the way down on those lower time frames. You just see the reactions better. So I mean, here we have market structure here, right? So I'm gonna go from this higher high to this lower low on the 4 hour. But if we go to 15-minute, it's just gonna be market structure, which we go from a higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, somewhere in here, chalks up, but doesn't mean anything because we're not in a 4 hour demand. So we keep going, lower high, lower low, lower high, lower low, lower high, lower low, somewhere in here, lower high, and keeps going. Does that make sense, Perry?
Yeah, you're just doing the you're just going different time frames, right?
Yeah, it's just a pairing. So just always keep in mind this, right? This is how we know like direction, like you were asking. The market structure is bearish, right? On the daily. But even before we got here, where's my oh, there we go. Even before we got here, we knew that price had to go up into that, leg, right? So we're gonna buy into, like Nathan said, we're gonna buy into it. And that's why you'll always see me put on my charts, this is my bias. Because what they call, whenever, like for instance, in a downtrend, when you go from a lower high to a lower low, they call that in the impulsive move. That means price is moving along with the trend. When price goes from a lower low to eventually make what we think will be a lower high, that's what you call the corrective move. If you know what phase your higher time frame is in, you know what to do. So in your impulsive move, you follow whatever is in trend. So this is the impulsive move. Here we are selling. We get somewhere down here, we get a chalk. Once we get the chalk, then we move into what's called the corrective move. And then here, we're buying. And so we buy all the way up until we get to there. We get to our supply, we get yet another chalk. on the lower on our whatever time frame. Like you use daily, use 1 hour. If you use 4 hours, use 15 minutes. And then now we're currently in our impulsive move phase. So until we see otherwise, we're back in the impulsive, and now we're selling.
Understood. Can you show, please? So there's 3 trocks. There's one, the yellow, the first yellow. Oh, can you go back?
My bad. Yeah.
So it should be 3 chalks, right? You said this first yellow circle, and then it should be a chalk, that one, but on the way up as well, and right there. So can you show those chalks on the 1 hour time frame, or 15? Yeah, 1 hour.
So let me turn this on. This will make it easier for you to see. Okay. So there was the first 1 hour chalk right here. You see it?
Mm-hmm.
Then I'm gonna go back and let me do this one first. Here was the one that was more obvious. Now load right here. So we got a chalk right down here. And then see how the structure just continues upwards, right? And then let's play out a little bit for us. It goes up. It didn't exactly tap the, what's it called? And then we get, it fails to take out this low. And then we get another chalk right there.
Where?
Right here.
Right, okay.
That's more consolidation. It'll be, yeah. So went from lower high, higher high, lower low, lower low. All this was consolidation. Then it breaks for the high, comes back low, breaks the high, and then we're going to head all the way back up there. Does that make sense though?
Yeah, I got it. Thank you.
Yeah, problem. So yeah, like Nathan mentioned, you don't want to use too many time frames, but it's just having a pairing, because pretty much every impulsive wave, if you use, like, for instance, a daily higher time frame, then you want to use another time frame that you look for your POIs, where the market structure just happens to follow, that it follows in, it ends up being market structure. So like this whole move down was a few candles, but it was a trend on the lower time frame. And that's just multi-time frame market structure theory. Like you can always think about it pretty much like stair stepping. So the market, I mean, do it like this. You get market taps into your supply, right? Boom, boom, boom. Okay, cool. So it's going to move like this. This is what we expect to happen from a market structure theory standpoint. We expect this low to be taken out. And then this is what H1 is going to look like. So it's going to go down, tap into some CPB. It's going to pull back. It's going to come back down, tap into CPB, pull back, come down, and just kind of do like this on the 1 hour. It may end up hitting a CPB, causes it to break structure, but it doesn't mean that you start buying all of a sudden. It may mean that you get something like this. The CPB may just cause a bigger pullback than expected until it keeps going.
So I remember Lucad wrote something on. He wrote a good presentation. So are you doing the same thing? Are you just drawing your daily supply zones and demand zones? Well, say we're in the downtrend. Are you just drawing your daily supply zones, and then from there, if it hits your supply zone and it has a 1 hour chop, you'll be selling there until it reaches until it chops again on the 1 hour?
No, I sell based on market structure. So if it comes into this supply, I know this is a lower high, I'm just going to keep selling until until it fails to take out this low. If it fails to take out this low, then I'll know to expect something like this to happen. It'll come here, it'll stop, and then now I know at least at the minimum it's going to take out this high. So I know price is going to at least come back into here.
So is every day a sale though? It's every day, like you say, I trade New York, it's New York session. Will every day be a sale?
No, it just really depends on what your direction is that the market is going, right? So, I mean, it really what it comes down to your market structure. And let me show you an example, right? So you had another supply right here, right? When price was here, there was a chalk, right? We went from a lower high to a lower low. My expectation was at this point, oh, this probably will be the next lower high, so I'm just going to keep selling past here. Well, price comes down, and it did sell. So you sold, you sold, you sold, and then it starts spazzing. Well, this was a doji, this was a bullish candle. We're close enough in the range of this lower candle right here. This was obviously a rejection. I knew at this point that, all right, price has to go from here to take out this high, because this move has now failed to take out this low, because I have a rule that if it has two candle rejection at the spot in the area of where it's going to take out, more likely this is going to fail. And then that's exactly what happened. Took a while, but what did it do? It took out this high.
Yeah, exactly. So from there, so every day would you be buying from there? Because I don't think every day was still a buy. Or you just wait for it.
Yeah, I would buy. I would be buying this entire move until it gets up to here. Then once it gets up to there, then I would know. All right, so I'm gonna go back and sell again. Once I see a chart.
So can you go to like NY session? Is every day a buy? Because like,
well, it depends. Some days it may give you a setup. Some days it may not.
So like, do we trade? Like, do we just wait for a buy, or do we trade the sell for the pullback?
It's really up to you, right? You can do whatever you want to do, but where you could trade, for instance, this sell right here, but you have to make a decision on what is the most highest probability and how many hits are you willing to take. Like Nathan mentioned, like I was upset. Like it was before you came on. I'm upset from the loss I took, even though I did profit this morning, because I just knew the loss wasn't a part of my plan. Like if I make a loss and it's a part of my plan, I follow my rules, I don't care. But when I make silly mistakes, oh, those are the things that eat me up inside, because I'm like, dang, that's money I lost for no reason. I could have avoided that trade just by following my rules. But every person's psychology different. Some people are okay with taking multiple hits before their trade goes. I like having a high win rate and avoiding needless losses, because I compound my money a lot faster that way. I don't have to worry about how many hits I take, because I know the hits I take must be valid, and if they're not valid, then I have to start looking at myself. But I mean, did you get a buy here? Not really. And it came at the very end of the day, and you probably would have been out outside hours. This day just didn't present a setup. This day, did I get a buy? Yeah. Well, this came right towards the end of the New York session, but you would have cut this buy. You could have taken it. Did we get a buy here?
What color is NY?
Oh, the red color.
The light red?
Yeah, light red. That's the NY session. Depending on what you had labeled as a zone here, you might have caught a buy here, but sometimes you won't. So, I mean, the price to pay is that you're being more selective over certain trades. Here, you would have caught a buy. This could have been 5R, maybe 10R, depending on how you played it. Did you really get a buy here? Yeah, you would have taken the zone from London, catch here and caught this buy. And then the thing is, you got direction, right? So you could have held this trade for 2 days and maybe hit 20, 40, 50 R just on that one trade because you got direction right. Would you have caught a buy here? Maybe not so much. Maybe depending on if you categorize this as a break, this could have been a buy. Okay. Would you got a buy here? No, probably taking a loss. Maybe that's okay. Depending on if you made a zone that pulled all the way from over here, you probably could have caught this buy. But ultimately, you know, it's not going to present you an opportunity every day by having a bias, but the goal is to keep you on the side of what's most likely to happen so that you can take a trade and you can hold it. You could bought here and held this trade for the next day whenever it would have came past your low, but you could have held this trade for 1, 2, 3, 4 days, and you could have mastered maybe 200R off of that. So when you get direction right, you can really hold trades a lot longer. That's the key to holding, I think. I don't know what you think, Nathan. Correct me if I'm wrong, but if you get direction right, you can hold trades longer. So that's the goal.
Yeah, no, look, direction is the most important thing, and structure it's there for a reason, and you can see it with your eye structure, it doesn't lie to you, the market. You kind of have expectation order flow failures where like we've seen that we haven't taken out that low yet after it did come into premium in the daily. It kind of popped down, didn't take it out. It's now back up in premium. We expect that, the extreme will hold. That's what we're expecting. But you never know, it could go straight through it and then we have that failure. But from what we can see with structure, time and time again, it's our highest probability to be on the right side of the market, directional wise, right? So we have to stick to that. Try not to look for too many reversals, right? Because sometimes we are programmed to want to do the opposite of what we know, right? What the market's telling us. So at the end of the day, structure is the most important part here. So.
Understood.
Structure is really king, guys. Like it gives you a sense of direction, but it doesn't mean that's going to always give you a trade. But at least it gives you a high probability trade. You don't need a system to make money on trading. You could flip a coin and guess the direction and get that right. Like a monkey has 50% chance of making money in the market. But if you want to, for instance, be able to extract money consistently, that's why we make these systems and rules so that it gives us a framework to come to the market. Like every day I do the same thing. I come here, I look at market structure. I say, okay, what do I see market structure wise? Oh, here was a lower high. Here's the supply. It's tapped into it. I know when I was chalked, I'm going to keep selling. Unless it fails to take out a demand zone and rejects, then I'll consider buying. But for the most part, I'm coming in to sell. Then I go on a chart. I mark up some POIs where it says, oh, if it comes here, I'm looking to sell. And then I wait. Most boring process ever. It's the same thing over and over and over again.
So you just wake up daily and you look at that direction, and then you mark 15-minute POIs, and then you wait for it to get to your POI, and that's it.
That's it.
Then you get 200R.
That's it. I wish it was more amusing, but it's really not.
I don't know why am I making it hard, but that's crazy. That's wild. You got to know that. I'm on it.
Well, like Nathan said, like that's the power of knowing the whole. Like the trade, for instance, I had, right? I'll pull it back. I knew from a daily endpoint, we had this supply zone. The day that we traded, we were right here. So my bias was very simple. I was going to buy. Ultimately, I wanted to buy until it hit that zone, right? It came on the 15-minute. I came on the 15-minute. I identified my POI. Okay, the day hadn't started. Well, that's where it was. I looked to the right. I saw this demand zone right here. This was my demand. I took my trade from within inside here. After I saw whatever confirmation entry I saw, something's like right here, something like this. I had my PBB, first one right here. It didn't do what I want to do. It didn't break it. I said, okay, cool. If that held, then you come to the 1 hour. This is the 1 hour high. And I said, okay, what happens when it gets to the 1 hour high? That was my next PBB. Well, news gave me a boost. It went through, but it rejected, but it still is closed bearish. I mean bullish. So I said, I'll keep holding. Then we end up getting a move, boom, it pushes through. I said, okay, cool. Then I went to the daily. And I said, all right, it finished through that PBB. I said, well, let me just see if it can hit that one. So I went to the 1 hour, and after it broke the 1 hour, because that's the next nearest 1 hour zone anyways, that's just a daily spike. We had some more news. It comes close. This was my next CPB. It gave me a small reaction, but it didn't show anything like it was going to reverse. What it do? It kept continuing. So I said, okay, cool. Now my next target would be somewhere at the midpoint over here. We didn't exactly get that high. On the 1 hour, it pulled back on Monday. So I said, cool. I'm going to lower my target and say, what happens when it gets here? So today, price got up to it, and you'll notice it failed to break through. It rejects right here. I closed my trade because I knew what was going to come next. I'm seeing wicks at this high. I know this is a CPB, but it's just not breaking. And that's exactly what it did.
That's it. Sweep up external range liquidity too, break up demand at the moment. So you could see a little bit of internal range liquidity being swept there, and maybe a bit of a pop down for a bit. So good idea on that one, man. Well done.
You different.
It's just it's all the same concepts. It's market structure, supply and demand, premium discount, like all these things work. You just combine them all together and just to be able to approach it the same way.
Brian, so now, I can see you blushing.
This is the best trade I've ever taken, like the best trade of my career thus far. But the crazy part is Marco and I were talking about taking a sell from here and holding the sell all the way down here. So
give it some time, Brian. Come on.
So all we're gonna do is flip the direction and do the same thing. So it's just, you know.
And then that would be external. That would be external range liquidity, right?
Yeah. So we wiped out the external at the top there. We broke a bit of demand, so it could be a sign now that we're going to take some internal range liquidity. God, imagine swinging that. What's that like? That's like a 9 pip stop or something, or 9 points.
Yeah, it was like 9
16.
points, I think.
Or 16 points or something.
That was 16, but I think my trade was like 10. It was somewhere around 10.
Crazy.
I think you told me it was 11. It was 11.5 or something like that.
Crazy. Yeah, I couldn't remember exactly.
Yeah.
God, I've never swung one of those, bro. That is mad.
It was all going back, like you said. I just knew there was supply here on M15. It broke through. There was supply here, like a CPB here on the 1 hour. It broke through. There was another one here. It broke through. That's all I did was kept following, saying, all right, where's the supply where it stops? This happened to be the supply where it stopped. If I look further left, you see that this was a very strong move that it made. And then now it's giving me a chalk. So now I can sell with the expectation that from a daily, I now expect from a daily perspective, until it fails to take out, it's going to at least go to this low. And I'm going to be selling for the next couple of days. So once I got the direction right, I know to hold my sales all the way down here.
So
heck, even past here if it can.
Right there is external liquidity, right?
Yeah.
That's external range liquidity, right?
It is, yeah.
Okay.
But you have them on the highs and lows, either off a range or on structure.
And then the inside of that, that's obviously inside range liquidity.
Exactly.
To move up. Okay, got it.
So where is my path to?
So you're internal. Sorry.
Oh no worries. I was going to say, as it comes down, it's going to tap into CPVs, all these demand zones that were created, and it's going to move something like this, probably on the 1 hour, and just keep tapping and keep tapping. Now, as Nathan would call all this internal range liquidity, and I'll just be looking at everywhere there's a demand zone and saying, all right, everywhere there's a demand, it'll go until eventually it takes out this low.
Yeah.
No. He said it's external, right? That's external.
All of this would be internal. until it takes out the edge right here, and this
Yeah.
would be external.
So on the way up, where's the internal and external on the way up?
So on the way up, this is your internal range liquidity right here. So on the top of highs, right? So highs, we have a high here, hence this, right? Substructural high. We also have a high here and also actual swing high here, right? So on those areas, that's where your internal and external range liquidity is going to lie. Especially if price was to range like this, that's your external range liquidity. And inside is your internal range liquidity, right? So it's the same thing kind of happening all the time. So you just took out this high right here. So that's external range liquidity taken after taking internal range liquidity. And now it'll be external range liquidity to target. This becomes internal range liquidity.
Okay.
The whole point is that a lot of people are buying here. They're buying and they're buying, and everyone's seeing this pump. They're buying. So all these stop losses and all those sort of things, whether, you know, whatever your understanding is of liquidity, is basically lying here. There's a lot of people going bullish on this, right? And there's a lot of people shorting from this area here too. So we got people going short all the way down here. A lot of stop losses on this because they see a rejection maybe at an even number. It's a piece of resistance. So this just sweeps it, changes character, and then targets the rest of the people down there. That's all that it is. It's just filling orders, isn't it? Exchanging a buyer for a seller. So that's really all it is.
Yep. Does that make sense, Perry?
Yes, thank you.
Awesome. All right, guys. Thank y'all for the questions and good dialogue. The recording will be up in the next for the next 48 hours, and then we'll have our next call on Thursday at same time, 12 o'clock p.m. Pacific Standard Time, GMT -7. If you have any questions that we didn't get a chance to answer, feel free to ask us within Discord. We'll be glad to answer. But with that, guys, I leave y'all to have an awesome rest of your trading week. Tomorrow's FOMC is going to definitely get to be very interesting because this might be the first signs that the Fed is going to pull back the interest rate hikes. So please expect tomorrow to be very volatile. Please be careful with your accounts. So with that, guys, we will talk to y'all later.
See you guys. Thanks.